What is up, everyone? Back here on YouTube to say that interest rates are again at historical lows and the time to buy a home right now. Give me 1 second. Hello? No, I know inflation's up. What do you mean interest rates are going back? I gotta go. Gotta do a video. Well, everyone, here we are. Inflation is up. Stocks and crypto are going down, down, down. And to top it all off, the Feds just announced this month that they're going to hike the interest rates. What is up, everyone? For those of you who don't know, my name is Jay. I'm a real estate agent out here in beautiful Honolulu, Hawaii. Alright, all we're hearing in the news right now is that the stock market is going to It might be very difficult to understand how this affects you and what to do with all of this information. So in today's video, I'll be going over why after 2 years of historical lows, the federal interests are going up, what could happen next, and how that affects you in the Hawaii market. But before we move on, don't forget to smash that like button down there and subscribe for more videos about real estate and the market in Hawaii. With the exception of an 8-week period in 2011, interest rates have remained below 5% since 2011. In order to understand why they're doing this, let's talk about the role that the Federal Reserve System has in our government. The Federal Reserve System is the central bank of the United States. Under its powers, it forms monetary policies and regulates banks in America. The Feds love a strong economy, but ultimately, the long game is to have a stable and sustainable economy. Inflation. We've felt it in our wallets. Prices are going up, shortages from everything from gas, clothes, groceries, rent, and even baby formula.
The baby formula shortage has gotten worse, now approaching 70% nationwide.
Due to the effects of the pandemic, inflation's dramatically increased, climbing to a whopping 8.3% in April 2022 compared to last year. That's more than 4 times the average cost of consumer goods that we're paying for than the same time last year. The inflation rate and the interest rate tend to follow each other. In order to keep the inflation rate hovering about 2%, the Feds utilize the interest rate to help control it. The idea is if the inflation rate dips below 2%, then the interest rate will shortly follow after. On the other hand, should the inflation rate go beyond 2%, then the Feds will use the interest rates to combat it. And that's why we're here. The Feds basically make borrowing money, like credit cards, car and home loans, more expensive and unappealing to consumers, and to help cool down demand. Think of it as an economic balancing act. While this may not help consumer goods in the long term, having interest rates rise also affects your mortgage rates. The seller's market that we've seen in the past couple of years may start to shift into a buyer's market. When we went into the pandemic and interest rates were, say it with me, historically low, we had tons of buyers and so little homes to go around. And then when the Feds announced increases in the interest rates, this could mean that we're moving into a buyer's market. And we're already seeing signals that this is starting to happen. Let me explain. Say in a seller's market, there are 20 buyers with a certain price range for homes. And in the market that they're looking at, there are only 10 homes listed for sale that meet that criteria. This is what you call a seller's market. This will cause a bidding scenario as multiple buyers will be competing for the same home. When interest rates rise, this causes multiple buyers to delay their purchase, stopping their search, continuing to live at home with roommates, or renewing their leases. When this happens, the same amount of homes are still listed for sale, and the remaining buyers have a better chance of finding a home without competing. Instead, in this buyer's market, sellers are competing for buyers. But wait, Jay, you haven't even mentioned the interest rates yet. How does this affect mortgages? You're right, even if those remaining buyers have a better shot, having higher interest rates declines your purchasing power in the market. So say if you were comfortable with a 30-year, $1,500 monthly mortgage with a 10% down payment. Back in May 2020, when interest rates were about 3%, you could afford a $400,000 home. Now let's take that same type of budget, but use the interest rates for May 2022. At 5.3%, a 30-year, $1,500 monthly mortgage with a 10% down payment can only afford you a $300,000 house. That's a reduction of $100,000 to your purchasing power. Crazy, right? Now let's talk about why higher interest rates could be a blessing in disguise for homebuyers. 1. Slower home price growth. According to chief economists of Redfin, a brokerage, there's a correlation between home price growth and interest rates. In a typical year, if interest rates increase by 1%, there tends to be a 5% drop in home sales price growth. Because of buyers trying to lock in their rates back in late April and reporting for May hasn't come out, we haven't quite seen the effects of rising rates yet. As the usual escrow process takes about 45 days to close a home, we probably won't see the effects of the rising interest rates until mid-June. 2. Less competition. Higher rates mean potential home buyers might be priced out. It's bad news for those people, but great news for those who are determined and stay in the search for their new home. Now, how does this affect you in the Hawaii market? Now, living in Hawaii, we have a very unique situation where median single-family home prices broke $1 million in August 2021, and we haven't seen those prices drop since. When numbers come out in a couple of weeks for May 2022, we'll see if that changed. On top of having an insane median single-family price, we have one of the highest rents in America too. For February 2022, where the national average was $1,300 a month, Hawaii was at $2,300. And higher interest rates could mean higher rents, as more potential buyers dip out of their search for a home and to rent instead, meaning rental demand increases. Now, it's not a secret that many people from Hawaii are fleeing for more affordable cities on the mainland. In Hawaii, we also have almost double the amount of people living in multi-generational homes compared to the national average. Now, I can imagine a lot of these people, whether they're renting or staying with family, saving their hard-earned money to be able to keep their families together here on the islands. And with further development of Central and West Oahu, hopefully that can still be the goal for them. And here is why I think you should get a home in Hawaii if you can qualify. Appreciation. Here in Hawaii, we have one of the highest rates of appreciation at an average of 46.55% after ownership of 5 years. So if I math this correctly, and you bought your home in 2017 for $400,000, your home could now be worth at $586,200. That's $186,000 that you gain in equity for living in your home for 5 years. You're probably asking, Jay, what if in 5 years the interest rates go back down? And to that I say, you can always refinance your home so you can secure a better rate with your bank. It's what we've seen so many people do during the pandemic. As interest rates lowered and banks advertised their rates, many of them refinanced their loan. Now, Warren Buffett has a quote on stocks that holds true to real estate as well. The rewards are huge if we just remain patient. Having a long-term frame of mind goes hand in hand with this. Here's what I like to say. Patience is always rewarded. So if you're a first-time home buyer or buying a home and have intentions of living there for the long term and have the means to do so comfortably, I say go for it. Alright, so that's pretty much it for this video. What do you think about the interest rates? Do you think the housing bubble is going to burst, or do you not care at all? Let me know in the comments down below, and before you X out of this video, don't forget to smash that like button, and I'd be super grateful if you share this video with your friends and family. And lastly, subscribe to this channel if you want more videos about real estate and the market in Hawaii. Thanks, and until next time, peace.